right before the close, I sold Facebook Meta in the regular session at 130, slightly north of 130. And then I put a limit at 120 and I was hit like 10 minutes later. So I made about 10 grand in about 10 minutes. I was just pissed I didn't do a bigger position. The last time I shorted on earnings, I made like, what was it? 15 times my money on options on Facebook. And I'll share with you what I did today and what I did a while ago. And that's the most important thing. So I'm just trying to be transparent about what I do, but you know, this is probably not the greatest. And then in the FX space, I got stopped out of my New Zealand dollar Canadian. I guess the Canadians, lowered their interest rates less than what it was expected. The Canadian dollar rallied. And I got punched out of my New Zealand dollar Canadian, and I made about 200 pips on those trades. And now I'm out of them. And now I'm long pound New Zealand, long pound yen, long some euro versus US dollar. And I said yesterday I was going to buy more pound New Zealand, and I did just that. So I'll kind of discuss again why I did these things. And that's the more important. What I'm really trying to do, you know, in the limited time we have together, is share with you ideas on how I evaluate trading opportunities. And what I look for is small pockets of risk where the risk is very small for a much bigger outcome. And so this is the pound New Zealand. I talked about this yesterday. It's kind of in a very funky kind of sideways range here, but you know, when I look at certain things going on, I think you could have just a huge upside long. So this has been in a pretty profound downtrend for 10 years or more. But you can see now we're starting to peak above this downtrend line. We took a walk on the wild side, poked our nose above that thing. We've kind of come down a little bit, but the more we just hang out here, I think it's setting up for something that could be something that looks like this. So I think that, I don't know, I just get a feeling that this is setting up for something. So to me, it all starts with a pattern. What I mean by a pattern is that, you know, this came crashing down, it made a low, bounced off the low, retested the low, and then came through what we call the neckline. And to me, this put in a bottom 6 years ago. So, you know, that's the thing. Most people are looking at 15-minute charts or 1-hour charts. I look at weekly, monthly charts going back years, decades, because, you know, the more you understand, the more if you don't know the cards you're holding, then you really can't understand where these trades come from. And so to my mind, if a market has made a bottom, it's invariably, I shouldn't say invariably, but it's going to go higher. And so this has been a tricky one. I mean, this made a bottom, and then it's just kind of gone into this cardiac arrest. You know, so I've been playing, you know, the lows on the top side and the highs on the other. And so, you know, I've been taking, you know, some big cuts out of this market because you can, you know, these things, you know, move quite large. So it's just understanding where in the pattern and the development of something, you know, the more I look at this thing, it's like a symmetrical triangle. And, you know, we're just kind of camping out here. And so basically, you know, I see that there's support here, and then you had this huge dagger in the sand, the stake in the ground, whatever you want to call it, in the heart of the British, you know, pound gilt crisis 2 weeks ago. We had this huge reversal. Now, some bars are more consequential than others. Some bars, I knew right here, I was telling our members right here that this market has bottomed. And that's a pretty brave call when a market has come straight down. I just sensed that, you know, the thing made a new low and then closed 1,000 pips in the other direction, put a stake in the ground. So some bars just actually point where they want to go. And if you've got 6 years to wait, you you'll see the outcome of this. But, I look at all these bars here, all these here. What they have in common is that every time this area around the 180 was gunned for, by the end of the week, you finished on the high of the week. So there's just every time you hit this 180, 185 level, by the end of the week, the buyers are in control. So, I look at a combination of price actions, and then I dig within all of this stuff. And, if you just look at this, it looks random, and it basically is. But underneath the hood, there is a story, and that story is price action. And so I'm just surmising that this dagger in the sand is going to take us higher. But now, look, we could go lower, we could camp out. This could take another 3 months. This is what this pair does. I get the feeling that's not going to take 3 months. I just added a second position today. So you can see we kind of broke out last couple of weeks ago, had this huge move, and now we're consolidating. So I look at what a market is doing as well as what it's not doing. So to me, you could say, well, isn't this a head and shoulders? It looks like a head and shoulders. Well, it could be, but now we need to see the market acting. So it's one thing to see a pattern, but if the market starts kind of not respecting that pattern, then it becomes a busted pattern or what have you. So, there's a lot of nuance and what have you. I don't want to throw too much, but the bottom line is, these things tell me that this thing wants to go higher. And now I'm just trying to find an area where I can kind of join this trade, join this momentum, and understand what my risk is. And so there's really two pieces of price action that tell me where to join a trade. One is what I call a key reversal, where market makes a new low and closes on the high. Now, you can't just trade these in a vacuum. You have to see the trend and the pattern and what have you. But now I'm surmising that this is going higher. And then the other form is what I call an inside day bar. And you can see both yesterday and today, we're both trading within the range 3 days ago. So to me, this is a coil. It's a storing of energy. And I'm surmising the energy is going to release to the upside by virtue of the prior price action in the thing. So now I can set up a trade, and that's what I did. I just bought another piece right here, where, I usually advocate that you don't just rush in at the market and do something. Let the market confirm it. So what I would do is I would put a resting order, a buy stop above the high of today's action. And today's high was about 199. I don't know if I'm looking at the night session here. 199.83. So, you put in a high at 199.90 or what have you. Put your stop there, which was the low, which was what, 198.53. So now people say, well, how can you take 150 pip risk on a trade? And the thing is, I don't know my lot calculator here, but it's just doing a smaller trade. But the idea is not to put a 5 or 10 or 20 pip risk in a market that's going up and down 500 pips. You have to give it some room to breathe, some room to swing. And if you're going to cut it off too close, you're inevitably going to get stopped out. And what most people do is gets going, and then they put their stop loss right at unchanged or wherever they got in. You get nicked back, and then it goes back up. So I like to, if I'm anticipating that this is going to make a huge move, I literally got in here and gave this a 500 pip berth to swing, and it did. It swung all this time since I got in. But because my stop loss was way out of the way, I didn't get ticked out of this thing. And that's the key. And it's kind of it's an art. It's not a science. There's no specific rules. So you can see that we've broken out above this thing. We're just camping out here. And so if we now break above these highs, that will confirm this breakout, and then we'll be on our way. And I think you're going to have a sizable move in this pair. So we'll see. It could also just collapse. So, this is what we do. We pick areas, doesn't work out, dust yourself off and move, to the next one. So this is Meta. And I wish I could go and find that trade. There was a couple of right here. So this is when it announced earnings way back here. So during this week, I knew earnings were coming out. I bought these $300 puts for $5. And I thought, I'm just throwing this in the garbage. I mean, the stock was trading at 320. So that means it would have to go to 295 just for me to break even. So I just fooled around with some money. And this thing ended up going to 80. So it went from 320 to 220 on that earnings event. These puts went from $5 to $80. So, every once in a while you rummage around in the dustbin and you get one of those trades, and it takes care of a lot of bad trades. So why did I, the whole thing is, why did I do that? And so I'll play these earnings plays, which is very dangerous. But to me, I was looking at this pattern that was preceding it. So to me, pattern precedes trajectory. And I'm sure there's some members that we have on right now that can remember when I was calling it right there. So sometimes you get these fake outs, but that's why you have to understand the pattern that's directing the traffic. So this is what I call a governing pattern, because this pattern has been governing and dictating the price action since it confirmed itself. So if you understand the patterns, then you can understand the play. And that's why I shorted Meta today, because this is just a downtrend. And there's been no sign that this trend was going to turn around. So I shorted, I shorted on the close, and I covered it at 120. And now we'll see where it goes from here. But this still is a very bad looking chart if you're long. It just looks like a head and shoulders with a down-sloping neckline. And frankly, this thing doesn't look like it's gotten started by virtue of the neckline to the top here. I could envisage that this thing gets cut in half from here. So, even when you think, well, this thing's been so destroyed, and you hear this on TV with these announcers, 380 to 130, surely somewhere in here, it should be a buy. No, it's still going to get cut in half from here. So I look at all these trades the same. They all have a trend, a pattern, price action. And what I try and do is find very small pockets where I can get in. So I saw that the market was being crushed overnight because you had Microsoft and Google announced last night, and both those stocks got crushed. So I could see that the NASDAQ was going to open lower, but the way it opened, the way it closed yesterday, it didn't make any sense to me. Meaning that I thought there was going to be a rally at some point today. And so I bought all of these stocks in the morning, like Zoom. I do this early morning session called the boiler room. And so if I see that a market is going to open lower, then I look for things that, I can get on sale. So you can see the market opened right there. That little left hash mark there is where it opened. Then it went higher, and then it cratered. So I bought Zoom this morning in the pre-market session at 82.5. The stock went to 85. I blew it out. And I was able to get in, where I understood that notwithstanding all the carnage in the market, notwithstanding that the market was collapsing, that I found a little place to camp out in and get a trade on. So to me, this was a very tricky area. Why? Because this is where it had an area of resistance. So when the markets get to these areas, you don't just kind of slice through them. So you had this reversal right there where you made a new high, close on the low, right into this area. So this is why I was buying put options today, because I was just betting that we're just not going to slice through this area like a knife through butter. And there's a better chance that we could get kicked back here. This is a downtrend. So the thing is, I always look at what is the main trend and then try and get, look for opportunities where I see there's a place to get in. Now, this one is a little bit difficult. I mean, there's a lot of junk here now. You're really at the upper levels of resistance. You got support. And now, this is where it gets kind of random, where, I can't tell you where it's going to go from 1 hour to the next, one day to the next. It's kind of like in here. But what you try and do is find the patterns and the price action that's going to dictate the next move out. I'm always trying to find this. And in the meantime, I'm just taking pot shots like I did today, where I sell the upper boundaries here and look for a play. And then into tomorrow, I'll just cover those options. And then, we'll see where it goes. But this is just a random area now. But this is a very dangerous market because it is going to go much lower at some point. And the question is that some point now, or is it, the end of the year where, we kind of have midterms in 2 weeks, we might have a rally and, we'll see where we go. So I always carry these two thoughts that on one hand, we're still in a very big, bad bear market and prices are going to go much lower. On the other hand, you do get these relief rallies that can be very extensive. And so this has been kind of a very difficult market this year, navigating these two things. And it happens very, very quickly. If you're wrong, these moves are hellacious. So it's kind of, understanding that this is the pattern and this is just a fake out right back to the neckline. So if you understand this, then you don't get suckered in this. But if you're looking at a 15-minute chart and this goes up every single minute of every single hour for 5 days, that's when you're likely to get suckered in and being just drawn into that price action. And that's why you kind of have to understand the cards you're holding. And to me, these patterns and these trends tell me which way I need to be faced. And, then it just gets to certain areas, the market actually just tells you. It does a reversal, and then you can carve a nice trade out. But, now you're just in this kind of garbage area where it's, could be a lot of this. So, everything in its time. That's why sometimes I load up the boat and I take big cuts at the market. And sometimes like this, I'm just kind of fooling around and going with the waves. Because it's, every day is different than the other. It's 3 days up, huge, and then 3 days down, huge. So very difficult. I have members saying, well, I can't, ever get in sequence. I can't ever get, no shit, Sherlock. This is a bucking bronco. I mean, this market was down 3% and then up 3% on one Thursday, 6% in one day. So if you feel like you're, on this rocky boat, it is just tremendous volatility. Now I try and make that volatility work for me, and I try and find areas where, I can seek a little bit of protection and, just test things on. And, options are very risky, but also, you limit your risk to whatever you pay for that put or call, but you can lose most or all of it. But then you can also have something go from 5 to 80. So Meta is over. What's it doing? Oh, wow. I put a 120 limit in there. Now it's 112. It's just getting wasted. But the market is actually up. So that has been the incredible thing. You had Google getting wasted today. You had Microsoft getting wasted. And the Dow is still up. So I think what's happening is you're having this decoupling now. And, the things that brought you to the dance is not going to, take you to the ball. It's meaning that the last 10 years, Facebook, Google, Microsoft have been the plays that have driven the market higher. And now, you'll see new leadership. The leadership will go to energy and other things. And these things will never come back. So it's just the nature of the markets. You get mature and things change. So this was Microsoft. So this is the kind of carnage that's been going on, here. And so I think things are going to go a lot lower. But, it's just a very dicey area in here. So, what I try and do, and this is kind of a microcosm, is I try and understand, okay, where's the pattern? Where's the momentum? And then where can I kind of take a shot? And I've been doing a lot of this lately where I just get in at a sneaky place, the thing rallies and I just get out. The minute it rallies, I just not going to ask any questions. I just get out. And so this morning when the NASDAQ was getting cratered because Google and Microsoft had reported bad numbers, this is Zoom. You had this kind of underlying pattern, and then you had this price action that on balance, prices are, going higher. You're making higher highs and higher lows. So this is what I look for. This little left slash mark is where it opened this morning. And that's where I bought it, right on the low. And then it made its little push. I took my money and I said, thank you very much. But what I'm trying to establish here is that, and so when I got in here, my feeling was I'm going to risk to maybe somewhere underneath that low. So it was maybe a $2 risk. So this is what I'm talking about. Even if I lost on that trade, what I try and do is find these areas where you can get in the market and then just camp out without feeling like you're going to get your teeth knocked out. So if I can buy that on the low and just see what it does, again, I might not make, a ton of money, but, at least I can camp out. And so what I've been doing is getting in these things very quickly. And then as they break out of their ranges, I just take my money. Now, I'm not encouraging you to be a day trader. I usually like to hold things. And this is what I was saying yesterday. This is why I got out of team so quickly. I had a feeling this would reverse. This is an ugly chart, but I had a feeling that right in here, there was a pocket of support that I could kind of go for a small ride. So I bought it there. And the minute it opened the next day, I punched the clock. I made $7. It went another 3, 4, whatever. And then today it collapsed. So now, this is something where I would say this is probably a good trade for the downside. But, when I get in a trade, what I like to say is, how clear a path do I have? So I imagine myself, if I get short here, this is what, I'm obviously looking for. But right in the way there is all this clutter. You got to clear through all of this underbrush. So this is still kind of a tricky trade. But on balance, I think that this is going to go lower. You're seeing this trend, this channel, and it's really these guys right here, these reversals right there. So you have a huge kind of double top in this area at the 210. And then it's the combination of that price action and then how it came off. Made a new high and closed on the low in both of those days. So on one hand, I say, okay, this is, a trade that's likely to go lower. But the problem is there's all kinds of crap in here. As this thing goes lower, there's all kinds of stuff so that you can get these random bounces. So, what I try and do is find these little effortless trades. Now, the way I would approach this is that, tomorrow, if it opens higher, I would maybe take a crack at shorting it somewhere in here with the view that that's my risk. So I use these openings to kind of create risk reward things, but understanding what you're looking at in the first place. So, I want to, take a look. And so this is, a horrible looking chart, meaning that it looks like it wants to go lower, but there is just all kinds of stuff that it needs to clear through between 160 and where we are now. It's going to be a tough path. So what I would do is I would just look for rallies. Instead of selling it into weakness, instead of chasing a lower momentum, I would wait for the strength. And that's what I do. I look to sell into a higher opening and buy into a weaker opening, depending if I want to buy something, and the market opens lower, or if I want to sell something and the market opens higher. So this one is a complicated trade, and I would keep it on a watch list, but I think it looks kind of tough in here. NVIDIA is up. I see that NVIDIA is up. NVIDIA's, I've been taking pokes at this thing all the way higher here, and not quite sure. Again, Microsoft and Google and all of these things, they look like they were taken off, and then all of a sudden, the floor dropped out. And so, some of these things are a little bit trickier. Don't quite know what's going on in here. So, now we're up in the after hours. I don't know. We had this kind of reversal here. I don't know that I would chase this one. So again, my mindset is, I'm looking to buy on weakness and sell into strength. If something's going to open higher, I don't really want to chase it, because what's been happening is that all looks good in the first 2 hours of the day, and then you come in and get body slammed, where it just comes and gets smacked. So, the whole thing about trading is discipline. And if you see something and it looks like it's getting away, just let it get away. What I'm really trying to do is get bargains like Zoom, where kind of close on the high here and then opened all the way down here. So to me, I know price action, this has to come back and shake hands with the previous days on close. You're not going to just close on the high of the day and then open here and then go like that. There's a certain way these bars, so that's when the NASDAQ it closed on the high, and then, I saw that it opened down here, and I go, that makes no sense to me. That's just not going to open lower and go like this. It has to go and touch this, and then let's see what it does. And then it came back and closed on the low. So there's this whole sequence, the way these price things, strike up. So if I'm looking to buy something, if I see this bottom, and then it just opens lower, I see this key reversal, and then it opens lower, I'll buy into that. I'll buy that weakness. But, I'm not really inclined in this market to chase strength. So if this opened higher and I'm going, wow, this is bottomed, it's gapping, I should go for it, it's better left alone and then wait for it to kind of pull back. And then, so you got to be really stingy in this market. Buy the sell-offs, sell the rallies. So I don't know. AMD, let me see what AMD. It stopped going down. That's all you can say about this, but this is an ugly looking trend, and it just looks like it's on the floor here. So I don't see anything. I'm looking at these Chinese stocks. They had an ugly day. They're all ugly, but I had a feeling this thing would come back today. So you see, like, it sold off the other day when Xi, consolidated his power. You had this huge gap, but you close on the high of the day. So this market again has been so overcooked to the downside. I had a feeling these things were buying. I didn't watch them today, but these things might be interesting on a pullback. They may have bottomed. They're so ugly, and there's so many reasons not to own them that maybe. But now they're kind of gone. I was going to buy that reversal in all of these things the other day, and I clearly should have. This is Pinduoduo, and this may be a sneaky little buy. Yeah, this could be. So here again, I look at the price action. You can see right here, you have this key reversal, and now you've got this reversal. So this is what I call, kind of an insurance bar, where you get in here and you know where your risk is. So I'm not saying this is going to go up, but it could be interesting. It could be interesting. So I don't know what I wanted to buy this the other day. When things are so bad, when sentiment is so one way, that's typically when markets can do the other. So this is Pinduoduo. This is the strongest one, the one I like the best. And now you've kind of got this funky bottom. And if we start making our way back to this neckline around 68 or 70, watch out. This thing could really find a way to catch some. So, it's a crazy bet right now, but that's what the market is. The market is really counterintuitive. I'll look at gold just to look at everything. So again, what I'm trying to do is kind of demonstrate a way that doesn't matter what you're looking at, just try and assess. Now, sometimes things are more difficult, and if it's not clear, then just don't trade it. There are certain times where, things are clear as a bell. So this was gold. When this thing was put on a top on the daily and the weekly and was about to break this area, certain things are just like no-brainers. And this trade, along with this silver trade, was right where these things were about to break down out of long-term bear price patterns. So trading is all about timing. It's all about that right time. And when something's mature enough and it's done the right work and it's about to go through certain things, that's when, and then other times like now, they're just banging around. And so the opportunity is not as fertile as it was back here. And you got to realize that. I mean, you might have to go weeks and weeks of just waiting and waiting while things sort themselves out. And, I think that's the thing. Everybody's impatient. Everybody wants to make $1 million every day, but it's not. The thing is, make these big moves every couple of months. So you can see I made, over 250,000 on that silver trade, gold. I made a boatload on all of these trades. So it's all about timing. So what I was looking at with gold was this long-term ascending broadening price pattern, which is inherently bearish and which tells me that long-term that price is still going to go lower. But, you've got a little area here where there's a bit of support. I don't know how long it can go before it peters out again. So that's where it's a bit of a trade-off, where I think the market's going to go lower, but there's some short-term support. So do you play that? I'll step in there. I'll take a trade. Because you can establish a very good risk reward. You're right in an area where it's made a low, and get in here and see what it does. If you're wrong, you can get out pretty quickly. The market always tells you. So this was those trades. When I shorted gold at 1801 and silver at like 21, it was right when it was going to break this multi-year long-term uptrend line. You can see how the market camps here. And, after a while, it can only hit it so much without, before it's going to go through. So, kind of had a feeling it was going to go through. I put my take profit right there. And then I said to our members, it's going to likely have a retest right to the breakout area. And right on the dime it did. And now it's kind of broken below here. So it kind of tells me that I think that this trend is going to continue. So I think we do go lower in gold, but you can see we have a funky little pattern here that, sent this up, and you kind of have the same pattern here. And who knows, this thing could go to 1700. But I do think it is in the cadence of a bear market. So that's the thing. I will do what I call these counter trend trades, knowing that I'm just trying to hop on board a short little duration thing and then hop on board the big trade. So then when I see the setup up here, that's when I load up the boat to go this way. And so, here's kind of this channel here that it's been, so you see we kind of close to the upside of this channel, and then, we could get kicked back here. So not quite sure. You could also come out of here and get a short covering rally. So it can do anything. And I'll just watch prices, and, price will tell me what to do. So I'm going to wrap it up there. I had a tiring day. Wow, Meta's just getting punched in the face in the aftermarket. It's down $20. But what I find curious is that the overall market is not down much at all. So I don't know what to read into that. I still am long these put options, so I'm hoping that I can get some kind of follow through in the morning, and then I'll just levitate out of those. So this is the S&P, and you can see we've had 4 days straight. That's what the short covering, they just go, and then they don't let you out. But you have a slight little reversal here today. Made a new high, close on the low. Now you can't just trade those in a vacuum. It's going to be very important to see what we do, because even, I don't see this thing coming straight down through all of this. So it's a very, very tricky area that we're in. You can see we've come here, we basically just broke out, and this could be just a fake out, and now you could break back in here. So, on one hand, this is a bear market, and I'm always on guard that we're going to go back. But, now, I say to myself, are we going to really go through all of this stuff just, like this, like a knife through butter? It doesn't feel that way. So it's just very confusing in here. And so I'm just looking for areas where I can find. So you can see right here, there was a reversal in this neighborhood right there. So sometimes these guys are standing in the way. It's not coincidental. You come into this area and then you get knocked back. So to me, it was a little bit clearer on the triple Qs. And so I just took a short position today. And then I'll just look to unload that short, hopefully on some flurry in the morning. So I can't really say with a lot of confidence what I think is going to happen in here. But this is setting up for a massive move lower. I think under 3,000. So, all of this is just keeps the market complacent. So this is the S&P. We've been trading between this megaphone top. And I do think that we will find a way to bang into this low. So I think that's what we got to look forward to, either now or in the short term. I kind of thought through the end of the year, maybe we would find a way to traverse back to 4,000. And this is where I would just unload with both barrels. So this is the thing, is waiting for certain opportunities. I'm looking, I understand the sequencing here. And so if I have to wait a couple of weeks, a couple of months for this thing to play itself out and get there, I don't know if it will. That's what I'm looking for. And if it does, then, you can see how these things bang. And so now we're just in the middle. We've got support, we've got resistance, and we're right in the middle, and it could bang both sides. And, it could do this for the next 3-4 months. I would not be surprised if that's what we look like for the next couple of weeks through the end of the year. Mark says, where can we go with next steps with you? You'll get a message from our team after this webinar. And we have a number of different programs. Whatever your interest is, we would be, happy to help you out. But that's really what I try and do, is educate our members to opportunities based on price action. And the best thing I do is the boiler room. This is the early morning program where I get on 45 minutes before the market. I can kind of see what the pre-market is. So, this morning the NASDAQ was collapsing. But, I thought you could buy PayPal. I thought you could buy NVIDIA. I thought you could buy Zoom cheaper, based on that opening. So, certain things that are going higher, just because the market is crashing, it doesn't mean that, you can't find a good opportunity. And that's what, I try and do in the morning. So it opened right on the low, wasn't a great thing. Didn't take off, but like the other day I bought Team, went up $15 off off that little area. So this is what I try and do, is find little pockets where I can identify risk and reward, where I can camp out without getting, just rifled. These markets have got so much volatility. So the problem is, most people want to play in here. What I like to do is like body surfing, right? So most body surfers, I watch them at the beach. They wait till the waves here. You can see the white of the waves, and then they try and catch this thing, and then they just get driven right into the ground. What I try and do is, I stand in the water and I watch the water very calm. And then I look for a change in the water where it's getting a little bit more energy. And I can see that wave coming. And so I'm already swimming that way, so that when the wave comes, it takes the energy. So in the metaphor in the market is that I try and find the area of low volatility, get in, and then when it gets bigger, go for that ride. But then, if you start chasing it, so what I look to do is find this bottom. Here's an Adam and Eve bottom. Get in here as this thing's coming out, as I did with Schlumberger. But the thing is, once you get in here, your risk is very small. I can get in here with a couple of dollar risk. But now once this thing gets going, now your risk reward calculation is just very different. So it's just waiting for these little pockets where the market coils and it's ready to come out of a pattern one way or another. Here's another pattern. So you have that double top, head and shoulders, and it takes you for a ride. So it's just using the energy of the markets. I like looking at the markets and looking for these coils, getting in early, and then going for the ride. And then doing it all over again. That's great. It has been very helpful, and it would be a shame to give it up. Don't understand that, but so I would be very grateful to you guys. I've spent a couple days. Hopefully, I'd really love to hear. It gives me feedback. Sometimes I share these ideas. I never know how it's being registered. So I would really like your take, whichever way. And if you're interested in our programs, you can also go here and read what others have to say. So you don't have to, rely on me. Just see what others in the program have said. And if you're interested, you have your validation there. So I would be immensely grateful if you would share whatever insights you learned, good, bad, or indifferent. And here's just a little area where you click on this and write a review. Saying you are welcome, happy to help. This is what I do. You'll notice that none of these charts have, anything on them. This is what I call a clean or, a naked chart where there are no indicators. So people always say, do I look at volume? Do I look at, so I don't look at volume. I don't look at, moving averages, MACD, Bollinger Band, or whatever you find on traders' desktops. All I'm looking at is price and time. All I'm trying to do is figure out from a picture whether, there's a risk reward offset here. People say you can't pick tops or bottoms. This is really where I shine. I find things as they're bottoming and they're just, the horse is about to come out of the barn. And so all I'm looking for are pockets where you've got, buildup of energy, and then you release the energy, and then you look to, either find the pullback if it's going to go higher, or in this case, it's still a nasty looking downtrend. So we'll see what happens. Frank says, you're a unique person. Experience has taught you a lot. My fear and greed in an index sometimes does me harm. Frank, it gets everybody. And so this is what I try and share in the boiler room, is that there are many times where there are things I'm looking at. I really wanted to jump on that thing. And then I can see that it's, going to open and it's going to get away from me. And, everything, tells me that I should grab that and whatever. And then sometimes, gaps will work. You buy something in gaps and it keeps going. But in this environment, when things are turning this much, my whole philosophy is, grab something cheap. So, when this thing opened down here, my instinct is buy that. And it's an area where you can't get hurt. My philosophy, my thinking was, if I bought this opening down here, I don't think it was just going to open and go through all of this stuff like this and, end up down here. I mean, it could have, anything could happen, but there's a certain way prices line up. And, so I look for the cushion. When I see a reversal and then the next day it opens lower, I know I can buy it lower and get a better risk reward than if I bought it up here. So, in this case, this is my risk instead of that being my risk. So I use that negative energy in the morning to buy something that looks like it should be bought. So I can buy it cheaper and then take advantage of the energy. So I always look at things like the market like an elastic band. Like, things just don't go up and up and then up and then up and then up and then up. You always have a pullback. And so I always, wait for that, like the elastic band. You pull back the energy so you can build that energy again, and then it can relaunch. So Bradley says, do you think rates will fall back? So that's the thing, Bradley. Don't do any of that thinking. Don't try and think like the Fed and think, well, if rates come down, then the market will go up. And, that'll just give you a headache. And, these things are correlated, but they're a lag. So when something happens, it's, by then you can't form a risk reward trade, and it'll probably have happened. So, wow, this Facebook is getting just detonated. We've seen some extraordinary moves in the last 2-3 days from Google, Microsoft, and Meta. And then tomorrow, the granddaddy of them all, Apple, announces. And if this performs like these other three, the Dow will be down 3,000. And I think there's a good chance that it could. So this is the granddaddy of them all, Apple. Doesn't look as weak as the rest. But, as we've seen with earnings, these things just, so here is Apple. And you can see how conveniently we have nailed this support line. And the next time it touches, I don't think it's just going to kiss and go that way. I think, we'll go that way. So that 135 area is very, very key. So this is also an ascending broadening triangle. And what we know about an ascending broadening triangle is that typically prices return right back to where they began in the triangle. So I think we have $100 in Apple, and probably more. So I think we could go much lower. So this is the Super Bowl tomorrow. And Apple's been kind of trading, in this huge megaphone top. These things are called the jaws of death because it's not friendly when these patterns break. And coincidentally, this also comes right back to this. So everything tells me that Apple's going to be a $100 stock. Is it, next week or, 3 months from now? But it's going to be a $100 stock. So it's hanging on for dear life. And tomorrow you got earnings. So I'm going to take a crack at selling the earnings tomorrow. So we'll see what happens. So the 135 is what to watch for Apple. John, you're welcome. Almeida says, thank you. Really appreciate the knowledge. Do you recommend your program for a day trader? I do not have the patience. Yes, absolutely. To me, it's all about, so I am trading a lot of things, for 1-3 day things. I mean, this is not an environment where you can really hold on to things. So I use price action and price patterns like I've been showing you, either to buy something in the morning when it, I can see a bargain, or like Team the other day where it closed right on the high at 194. The next day went to 206. So, and I'm just taking those blasts. So it looks like I'm day trading, but I'm actually using the daily and the weekly charts to build the information and then using some price action to take advantage of these explosions. And it's just, we're just in such a huge ranging volatile thing that, typically I like to find things that I can hold on to. I showed you where I recommend our members got in Schlumberger 36. Today it's at 53. So those are the trades that I look for, that I want to stay in. But then there's a whole other things where, you can see that from one day to the next, it's up yesterday, down today. So I'll take advantage of that in a small way. So Almeida, whatever you want to do, it all comes back to understanding price. And I think it may sound, somewhat, gratuitous, but I think I can help anybody who's looking to trade, whatever their style. So I got stopped out in New Zealand dollar Canadian today. I haven't seen what it did today. I know there was something with the Canadian regulators, and I got stopped out. I had my stop just above this high right here, and I got stopped out. So that's just the way it goes. I got in at 80. I got out at 79. Made 100 pips. And so I'll look for this thing again. Canadian had some favorable rate thing. Everybody thought they were going 75. They went 50, and the Canadian dollar rallied. So we'll see what happens. Mohammed, I talked about the SPY. I think it's going to go to 3,000 in probably the next couple of months. But what it does between now and then is, it's a bouncing ball. All right, guys, if you would leave a review, I would be, eternally grateful. And, otherwise speak to our team members, let us help you in any way we can. So thanks for hanging out with me. I hope you got some value out of these sessions, and hopefully I will see you all very soon. Susie, you're welcome. All right, everybody, have a good one. Take care.